All right. Everybody got a good break. All right, so let's see. Would it be forcing a trade though if there was a setup on a lower time frame? If is so one of the most important things to me, if you're going to do something, especially if you're going to do something stupid, is having a plan for where that is not going to work. And if you can create a good plan, I mean, that's for anything. Even if you're doing stupid shit. But even if you see, if you see a lower time frame setup that could potentially trigger a 24-hour break, explore that opportunity. As long as you can set a good stop loss, which means that your stop loss should be in alignment with an area that would confirm a reversal or a move in the opposite direction of that trade. Right. Let's see. So would you wait to take that short with a candle close below cost basis or wait until it closes under the floor? So would you take that short with a candle close below cost? Are you talking about so yeah, I probably will. Um Especially with the Qs have a little bit better of an opportunity with an unfilled gap down there, which I'm expecting is likely going to we're going to start there first. But I suspect that if we lose 515, that'll be the target there if that is broken. So, and realistically, it's like you to your point, it's this break of cost basis 505.50 that confirms a potential move down. Also, I mean, I'll just be honest with you guys. So, oh, you guys can't see that screen. My bad. Um, but there's also just the fact that it doesn't really have a lot of empty space. So if it just doesn't have that setup, and again, maybe we could, you know what? Let's switch back. There we go. So really quickly, let's before we move forward, because this is a good time to do it. Let's go over what a good setup with my system looks like. And if any of you have had successful trades that you would like to bring up, I can't remember them all. Throw those out there. But here's what a couple of really good setups look like, um, especially on the 24-hour, right? The fuck is it at? Why do I feel blind all of a sudden? Oh, there it is. Wait, fuck is it? Is it Charles Schwab? Am I tripping right now? There it is. I got lost in the higher time frame. Okay. Okay, so let's go over this, and we're going to start by identifying the boxes. And let's go ahead and do this, because this is when we identified or were able to identify the play in front of us. This is when we first started looking at Schwab. All right. And this is, for an example, a absolutely 10 out of 10 setup. Okay, so pay attention. The first thing we can do, and we should always do, is what is above and what is below. You can see clearly, and that's good, that there's points of contact underneath us. right? And there's a box with a clear floor right here. That's right, Nike. We'll do that one too. Yep, that was a great trade. We can also recognize that what we are currently seeing is also an area of consolidation marked by points of contact at the top and the bottom. One thing that we always need is empty space. This is what creates the highlight play. And this is just, again, a rapid decline or advance in price without any retest or any structure. So there we have it. We have what's above, we have what's below, right? And let me not forget this. You also have an opportunity down here, right? With empty space and a punchback below. Now we identified this setup, and we also can recognize that earnings is coming. And I don't care if earnings is coming, because earnings just provides the juice to do what I know that we're probably already going to do. That are news, which is why this strategy typically supersedes the news that's incoming. Now, we'll go ahead and slow this down a little bit. All right. So boom, right there. Typically before you go down or go up, right? And this is why you can just wait for 24-hour candle closes. If you wanted to take it to the top, a 24-hour candle close. It fails to hold. The next day, it slams down. What does it hit? Its gap. Its gap is its cost basis. Now, my job is to start looking, because we're getting closer to earnings, at potentially taking a position that either highlights a move all the way down with the target of 66.40 and perhaps a median target of 68.50, right there at the 50% mark. So that's the current predicament, right? And we're going into earnings. Now, earnings, I never take one-sided. But in this case, I ended up dropping out of my puts because as it left that box, if it's moving down or breaking structure, I will typically start taking that position. So I took that position, basically acknowledging that A, it moved down really fast. And if you don't keep moving when you move really fast, you're going to bounce. Let's explore what that looks like. So cost basis is supposed to provide the volume to bounce. You see it? The interaction between cost basis and the floor that it needs to recover. This is why, even though you might want it, you gotta wait. you gotta wait, because it's waiting for those candle closes that ultimately will set you up for success. Next candle close. Sellers have a job to do, and they are desperately trying to get that job done. Is everybody following me right now? Can we see why this is a perfect setup? That's why it probably makes sense. Say thumbs up in the chat if everybody's following me right now. I know a lot of you guys played this with me, so you're probably like, shut up, but good. Okay. And again, the reason why this probably makes sense is because it's a clear setup. So right now you have a battle, right? But what is also happening here? Right? It is losing value as far as contracts are concerned. This makes it an opportune time to be looking. What just happened? So what are we talking about, right? Candle closes, contact. When you hit cost basis, tell me what is supposed to happen if it's not going to go up. Sellers are supposed to step up, right? Back down. That's what they do. But what do they not do? And what do we ask ourselves? What have you recovered? What is above and what is below? So that candle goes up, touches cost basis, pulls back, doesn't lose anything. And the next day, all of a sudden, we just got a signal getting closer to earnings. It's just a couple days away. 2, I think, to be exact. And now we have empty space to the upside. At this point, I've already dropped off of half of my position to the downside, and I've already grabbed the position to the upside via punchback. That's cost basis, yes. Cost basis, cost I'm sorry if I'm a nut, cost basis. Yes, cost basis. It's the 50% mark. I don't care what you call it, but I call it cost basis. So that is broken. And what else happens here? We close above, signifying the potential for new highs. Next day, oh, I wish I would have done that. Next day, the day before earnings, you come back, you retest the top. Can we not see why we want structure to be our stop loss? I can show you the same thing on an equity play with ELF, right? Going into earnings. Oh, I gotta let it play. Actually, yeah, it's not actually, it's probably a really good example too, but just gonna. So I got in right there, right? This is exactly why I'm telling you guys. Here's another example. Here's a floor that I need to recover. Sellers have a job to do, a defending. They need to defend price. This is what it looks like when they're not doing a very good job of that. Because when you push back, you want to hold. You don't. Do you see what happens when price opens up on the floor, allowing buyers to take advantage of that? That's where buyers buy. And what happens when price opens up there? I got on, yeah. So I ended up getting, that was actually past the third. On the fourth, I hadn't gotten in. Chad had brought this up to me, and I said, well, it's heading to the floor now for basically the third time, or maybe I'd say third now that I'm looking back, 1, 2, 3. But regardless, that's where it needs to break. Yeah, but on the 24-hour too, it's the same thing. I'm just looking here, but of course it bounces and it breaks cost basis, and at that point, I figured I'm going to go ahead and take my shot for the break above. And again, look, you're holding that price at 56.58. You're holding this price at 60.24, which is psychological underneath that floor. And as price gaps up above it, coming out of what? Consolidation. Expansion. Contraction. Traction. Contraction. Until what? You prove that you have nothing to lose, that buyers are in control. 1, 2, 3, 4. 1, 2, 3, basically 4. I would say that wick is the fourth, or that bottom candle right there is the fourth, and you explode back up. Now, going into earnings, all of this empty space up above us, the mid punchback that we're currently in, look, expansion, right? Expansion, going into earnings, contraction. You go sideways. So one, this provides me with the opportunity to acknowledge what cannot be lost on ELF. Because not only is this a 24-hour lot of empty space, which would basically destroy my position, not destroy it, but would signal that we're going lower. That's exactly what it bounces off on earnings. So with Schwab, right? The same thing applied. That's a perfect setup. Nike. Now, guys, we need to build a watch list. You need to build a watch list of things that have dumped, and sometimes that takes a minute, of things that have dumped, that are institutionally owned, that are going sideways. That is a great place to start, typically, because even the shittiest of stocks still take advantage of those empty space moves. right? What was the other one that what you guys, I think you guys were talking about Snap the other day. I mean, that's a perfect example. This is a fucking beautiful example because I don't get tired of it. I get sad about it. When empty spaces end over, right? The play is done for me. Right? But let's go back to Nike. So Nike, and this is something that we were able to go to the 24-hour, right? And let me describe to you, okay? So we're talking about the story, how or what is happening. And when you're on the 24-hour, you have time to do this, right? So we can start to describe the story. On the 24-hour, we have an area of consolidation. Directly above that, there's this mystery green candle. Pay attention, save that for later, right? This is why we don't do one step of analysis. So we identified a box, right? Now, let's go over one thing on the 24-hour that makes this an interesting story. And if you've watched me at all, you've probably seen me use this to teach. 1 rejection and 2 rejections. Big fast dump down, grind back up, right? Not even it takes you 1, 2, 3, 4, 5 candles, right? To recover that loss. And then 3 candles, you're back down, right? This is enticing for sellers. Now, you can do this in your own house. You don't have to raise your hand in here, but raise your hand if you've ever seen something breaking a low on the 24-hour or just period, and you decided to jump in. And immediately when you jumped in, it immediately reverses. If you've ever traded any of the ETFs at the bell, that's happened to you. Right? How or what does that make you do? What do you guys do? Right? You got to fucking panic. Get out. Shit. So let me explain something to everybody in here. And I've learned this more and more as I've moved through this market. There are rich people who are fucking idiots. There are people with millions who are idiots. They might not be idiots in making like money the way that they made it. But there are idiots with money. And when I'm telling you that taking a short position out, or even if that's not even fully, that provides the liquidity, right? So think about this. I need to, in order to squeeze something out, I need to liquidate sellers. How do I do it? Yeah, you basically Dave Portnoy them, right? I give them what they want. What do sellers at the top want? They want to pass the baton. They want to destroy or close below that floor. So they allow price to move down. We hit 69.50 and immediately pull itself back up. That's the 3rd time, motherfucker. 1, 2, 3. Sorry, I say bad words. At this point, it is on. Sellers, buyers, the tension is now in the buyer's favor. Because what do sellers have to do when you fucking scare the shit out of them? They buy back. And if you had a shit ton of volume here and a shit ton of volume here, and that volume is pushing price down and it flushes that floor and then gets pulled right back up, now this volume is starting to panic. Now those sellers are stuck or potentially stuck, and they are forced to potentially get out. At least right now, looking at the candle, they might still have a chance. They might, right? So we observe price. Now you'll see. That's what it looks like when sellers try to put up a fight. This is the icing on my cake, right? Because if they can't, because what? Okay, so it's this is why I don't use candlestick names, right? I think this is a gravestone or some dumb shit like that. That candle. What do I want to know when something reverses? When something turns red, what has it lost? Nothing. Not a damn thing. You didn't do shit. You didn't get anywhere. So the next day you gap up above that open and you close above those wicks. It's go time. right? But first of all, we left something out because we haven't done top-down analysis. Let's do that. So we go to the 4 hour and we delete all of these weird lines. Most of them. What do we see? What is keeping Nike from moving up? What have sellers been pushing off? Where is their volume pack? Their volume pack is directly above you. Now, you've got your signal. So, not only do you have your signal, have volume will travel. This is your supply pack. That right there was your foot, right? Or your hand grabbing onto that ledge and pulling yourself back up for the third time. And right now, everything is telling you that sellers cannot get the job done. Let me describe this to you in even greater detail. Price cannot even close below the top of that box. So can your lower time frame tell you where there's something is actually going to pull back? Yeah. How do you pull back from this high right here? Fast. How do you fill it up? Pretty quick. So these are, as something is building up and moving and creating that tension, it's important to track what you see happening. But it also takes patience, and let's also count how long this whole setup took, so you can get an idea of how long, if you see a good setup, that maybe you might have to wait for that setup to fully build instead of showing up every day expecting every play. Because these plays that we take ain't no joke. I'm trying to make what everybody else makes in 1 or in 2 plays, right? Well, people don't really make a lot, but I'm trying to hit that bag or 2 with low risk. And this is why I focus on it's worth waiting for. I can make more than what most people make in 2 days. In 2 days, in 2 days, than what people will make in 2 weeks of trying to fucking trade every single day. Now, if you're a scalper in here or day trader, whatever, do you. But even with that, there's days that I don't get it. I look at the higher time frame, and just because you can doesn't mean you should. It does make it a difficult environment when prop firms are like, you have to make this in 2 days. And then if you don't see a setup, it's like but whatever. Anyway, so back down to the 4 hour, right? Or 24 hour. This consolidation period, in fact, let's just make this easier. Weekly wise, consolidated for a solid 1, 2, 3, 4 weeks. Now, if we did even better top-down analysis, you would see that even without my box, a 75.50 candle close was enough to know that you're likely going to move back up. When I see a full setup like this, how many contracts is a full position? It's typically by risk, not by contracts. So in this example, or with Nike, I ended up adding a position after the break because it moved so quickly. But I had about $1,200 in Nike on the first entry. I can't remember what the contracts were selling for. I think they were like $40, but anyway, 4 hour time frame. So we've established that it took about 4 weeks. That's a month. 4 or 5 weeks. So you hit it, you quit it, you leave it alone, right? And this is a good example of doing just that. But let's go ahead and press play and describe this even further, right? So watch. Tap. Slow this down even more. Bam. So that, right, literally happened overnight. The beautiful thing about this is if you were still holding and you knew where your target was, where was our target the first time, guys? That was the entire block of empty space, and we were aiming for the 50% mark. I think it was off of the floor here. So that morning, right? That morning that you saw a gap up like that, you should have known that Nike had to have fallen under 77 for you to continue moving to the downside. And that what is above you is nothing. And so price is free to potentially move freely as long as buyers show that they are in control. And sellers don't even get a chance. This is just pure covering too. Now, I will say, this is one of those examples where describing the story, paying attention to your setup as it builds, setting alerts within the box, right? This is when that 1, 2, 3 starts to become incredibly important because it's perfect, right? 1, 2, 1, 2, 3, wick, liquidate, drive up, cost basis, right? And at this point, at the end of the day, sellers have a job to do. They have a job to do, and that is to push price down. And typically, if they cannot do that, if they're unable to push price back and under something, there's a good chance you'll be able to make that move. Yeah, 50% is typically where I take. That's especially on I mean, this is an absurd amount of empty space. What I know is that guaranteed you're going to go here, right? And that ends up happening. $50 mark, empty space down, retest of the box, build back up, watch the empty space up there, resistance. Look what you wick off of. Empty space up there. Resistance is established again. Tap off the very top of that box again. It's fun to watch. And you kind of just see how price, look, cost basis. Do you see how you just responded? You make your move, you consolidate. Pretty cool. All right, that's where I'm confused. I want to trade it your way, but I'm missing something. I don't know what it is. If price drops to the bottom of the box, what makes you wait instead of getting into the downside? I thought once it breaks the cost basis, that's telling me something. What do you mean? Inside of the box? So are you saying down? Well, it's up at the top replay. So if you're asking me down, right, with that dip under, yes, a lot of the times, if that was what your original analysis is going to be, then taking that break would have been what you would have likely tried. But here's where, let me help you with that confusion. A punchback cannot happen inside of the same box. So while you're in here, or rather in here, right? There is no such thing as a punchback. This is just a box. That's it. Now, had you closed and hit something and consolidated and pop back, that's a punchback. Here, that's right. So that's not. That's it's. This is a range in itself, right? Or a area of consolidation in itself. That was the floor. That's the floor of the box. That is correct. And it actually does go and make a new low. Now, I'm not sure what Nike is. I forget what it was bouncing off of when it was here. Yeah, it was bouncing off of a massive box underneath us. It's been a long time. Pretty sure. Yeah, that's exactly what it was bouncing off of. So knowing that, right? Knowing that is, I don't trade into structure. So that's already going to be a turnoff for me. So if it closed underneath 71.45, yeah, if it closed underneath, you would then look inside of that structure for whatever it is that your next price target would be, which would be right around, I'm seeing 68 flat. Where did I get into that trade? On Nike, I got into that trade a little early, but that's because of the waves, the 1, 2, 3. But I got in basically right about there. That was one of my first entries. I was tracking the resistance to our left, and as that went for that third approach. Now, this was one that I wanted to hammer harder, but it happened overnight. When it keeps going up, no. So while it's going up and it's consolidating, if it's going up, it's still tracking the possibility of that price getting hit. But as soon as it rejects and starts moving the opposite way, if it's out of the money, that's when the most value is lost. Are you talking about that one right there? That right there is the most important part of that box. The fact that you dip down and then pull yourself back up. That is a defining factor, right? In what made this trade a upside trade. When you're at the floor, it needs to be definitive. Foot on the gas. Mm-hmm. Yep. Let's see here. One second. Yeah, I could use Mara, but I don't really want to. We could do that, yeah. Yeah, that's a good example. It's not of a punchback, but it is of a candle close. Yeah, it's a great example. All right. We'll go ahead and do this one. And honestly, this is a good example of not being able to reclaim what you've lost. But this is also, what could be considered it's almost like less than a week. It's like the 24-hour range is here, right? Pretty clean top and bottom. And yes, on the lower time frame, it is made up of multiple areas of consolidation. But that being said, right, this last area, and this is right before we did this on TSLL. So if you're new here, this is something that we just were able to, I think TSLL contracts were, some of them hit over 1,000. It was a great trade. But Tesla, And again, this is TSLL, but we're using Tesla as the example here. We just simply counted, right? And I might have already gone over this with you guys, but we just counted, right? We measured, and this is an example of where that works. We measured the amount of days that it typically takes Tesla to consolidate and break. And what we found was pretty amazing. It is an average of 9 bars, 8 to 9 bars of consolidation. And if it goes past that, right? But look, I mean, literally, bar to bar, 9 bars, pop, right? Look, 9 bars and break down. 9 bars and break up. 9 bars, you do get a little pop up at the top, but then you finally get moving. 9 bars, right? This was just a little bit less than that 9 bars, but 9 bars. This went definitely past that 9 bars, but right before it broke out, it consolidated again, and same thing. On that 9th bar, it took off. So that was step 1, right? We're just counting. I mean, and that's simple enough. We can all do that. There's another example, right? This one was 8 bars, but around 8 to 9 is when we typically will start, I'll, especially in the future, continue to start looking at Tesla for that potential break. So we got that out of the way, right? And that was pretty simple. We were just counting. But the point, or rather the most important feature of this chart, is right outside of this area where we get points of contact. We have one candle close right there. Great example of a solid candle close outside, right? I don't care about anything else except for the fact that price settled outside of 2 areas that sellers control the price. I've identified what's above me. That's empty space. I've identified that above that floor is, come here, you little shit. Above that floor right there is more empty space, right? Probably, yeah, right up into the 353s. And look how price does, right? It pops up, gaps up above. It's probably like tough. You're like, what the fuck did it gap on that it could just go? Beautiful, right? You gap up, you hold, next day you fire straight off, you close inside of that empty space, and the following day you go and you hit those wicks. Now, specific price action, right, 4-hour time frame would have told you that there is going to be a floor here, and that ends up being perfect. Not to mention the punch down, which is another great example of price passing the baton, right? Beautiful example of price consolidating above where it needed to go, failing, right, to go and grab hold of anything else, period, right? In fact, it's a wall above you here that needed to be accomplished. That was 375, and the smallest little box sitting in between right there, and you failed to just grab that floor. This is also a previous rejection point for Tesla. So Tesla consolidates 1, 2, 1. You pop up off that floor, fail to even get above cost basis, and you end up dropping down, closing in that box, gapping down to cost basis, getting rid of that volume, popping up, filling the tiniest bit of empty space, and then pulls back underneath, and it's over with. You've liquidated all of the volume. The floor, you already gapped down, tapped the floor, pulled the volume off of it, brought it back up, used it to fill up that empty space, rejected that. And the craziest part, right, was that this was all, right, Trump, Elon's bromance. You're exactly right. But this is why I focus on the chart. Now, I know there's probably some questions on, well, we gapped down, right? Shouldn't we just continue to flush? If you look at the gap down price, it's on. The 24 hour is on the floor, which makes that a day of liquidation, right? You need to take that volume that's meant to reverse you and stifle it. So higher time frames are always first, and it's the first thing I look at. Now, as we speak, you are also seeing a somewhat failed attempt to reclaim that old previous floor. And potentially, so now that that box has been punched through, it goes away. Because we're focused on the most recent price action, which would tell me that above here, green candle close, that we would go up and fill up that small pocket of empty space, which could potentially allow Tesla to try to move back up, right? Probably not, though. And that would occur on a candle close, as far as I can see, 2 hour above the current control of 332.80. What's happening right now? You rejected that. And when I look a little deeper, I start to see that, oh shit, sellers control that price. Is that why we can't get back up? Is that why we're using that as a retest level? And then what's underneath me? Kind of empty. So right now, as we speak, sellers are currently completely in control. Now, this isn't a clear setup by any means. By any means, it's a little fucky. I'll be honest with you. You know, it's not something I would be like super keen to trade. But the rejection point on the 30-minute can't get much better than that. I could bring that box top down, actually. Hold on. There we go. Doesn't change. There. So hopefully, in this example, I was able to show you guys, right, grabbing floors, rejecting them, or even seeing sellers pull past that baton to the sellers underneath. What it means to be a successful seller and allow price to move up through that empty space and close back underneath control to establish down, or if it's in this case, we're pulling ourselves up, right? And we're looking to hold on to a floor. So, all right, through that example, does anybody have any questions? That makes sense to everybody, but also good setups, right? These are things that make it, and one thing that makes this clear, right? Because these are all trades that we took, is that the reason that they were easier is that we're able to identify what a good setup means. So if you're pulling up some shit that looks like this, please stop, drop, and roll. You're on fire in a bad way. This is not like, listen, you know, maybe I should have a class on what not to do. But like there is a handful of stocks, and it takes me not but a second to establish whether that's something that I want to do or not. I can just look and say, meh, you know, nah. Honestly, that could be a good trade though. But, you know, this is one that I would just set alerts on because it is a good setup. It does have a lot of consolidation. And as of right now, it looks like sellers are trying to control that price for sure with 99.50. So I set an alert on that. It's already done. That would be an upside potential, right? Because if they lose the control, we could grab that floor. But the punchback, the empty space, the little stutter step here, and then the control all the way up to 122, that's a good setup. Not yet, but it's a good setup. Now, before you start, and a lot of people make this mistake. They'll have a trigger to the upside, it will reject it, and they'll say, well, what about down? Well, go tell me. What's below you? What are you bouncing off of? How large or important is that particular level that you're holding? And my God, when you go to the weekly, it's just nothing but a fucking picture perfect example of everything, right? Another beautiful example of why we don't short or try to go short after something's made a massive move on a floor until we have confirmation. Now, this is a third weekly candle with a rejection at the top. So in order for me to know what's going to happen below, I have to measure that, right? Or look at what the most recent price action tells me, which that there is a gap down at 84.32. So if you could lose that floor and drop underneath 88.83, which you've already done once, that would be my next target. It's not large, not a huge target, but that gap is also representative of your previous area of consolidate or resistance. So when distinguishing your price target, you are just locating the past areas of consolidation, regardless if if they were punched through, but only once, right? That is like so let's just use this I'm just going to use what's in front of me, right? So if I punch through this box, right? Everybody needs to pay attention to this because I get this question a lot. When I punch through this box, that's it. The promise of a new high has been fulfilled. If I come back down, which you have, but you didn't touch it. If I come back down, it's that top that would provide a bounce. It's that cost basis that would provide a bounce, or that floor that would provide. None of these provide a signal guaranteeing anything other than the next trigger below you. So in order for me to know that something was going to be short, the bottom of that green candle right there, and the loss of that floor would allow me to know that it's going to fall. Now, of course, dropping back into the top is never a good thing. So if you close underneath it, the probability does increase. But ultimately, once a box's volume is expended, the previous price targets like the floor, cost basis, and resistance will just become areas areas of resistance. Which, if resistance is broken, right? If resistance is broken, then you go to the next one. So that would be cost basis. If you go breaking that one, then you go to the floor. Now you might have a signal. So, and then once that, if that was to happen, let's say you did bounce off the top, retest here, bounce off cost basis, retest here, bounce down, hit the floor, box up, and then lose it. Okay. But now that box is fucking gone because new price adheres to that. So by proxy, you are trading that volume or those resistances, but in a different form. So basically the point is once a punchback is completed, it is over. You no longer have a guarantee until that floor is lost. And the reason why is because the volume that's contained at the 50% mark is distributed and used to go higher. So now it's just what's remaining that provides that previous, so you don't have that guarantee. So we're looking for new, you know? Here's a good little example. Check that out. Now look, you punch down, you bounce on the floor for a quick retest, and you flush down. Where do you go? I don't know. Probably the box underneath you. That's a tricky one though, right? Instinct will tell you, oh, I should know. Most recent price action. That was a box, right? And that is a box. So you have double stacks. Yes, that is good, Alex. Bring the top of that box on the top down, though, to the candle closes, because that candle pops outside of it. The wicks are not at the same place. Let me show you what I mean. What is that, the weekly or the 24-hour? Oh, that's what I mean. Oh, does that come? No, hold on. No, you're right. You're right. I mean, the control is here technically. The wicks come off of that open price right there. So, I mean, it doesn't really matter. You got a gap down there, 1268 and 1220. But yeah, it does look right. Now, the cool thing about this is that your cost basis is the top of your box. So, now one thing I am excited about with Rivian is that it's falling relatively fast and leaving tons of empty space behind like that. All right, let's go ahead and turn our attention back to our slides here, finish up these before we call it for the day. I hope that everybody is following along and all of this is making sense. If you're not asking questions, you're leaving opportunities on the table to be and get better. And I know you can't tell, but like I really, 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 really want to see every single one of you see success in this. And I'm taking my time, and that might not be everybody's favorite, but I really want to make sure that nobody is left behind here. And that you guys are the fucking graduating class of fucking 2025 with some success rates. And whatever it is that you end up doing with this strategy. So again, I'm not in a rush. So don't think that you're being rude. Don't think that your question is stupid. I don't care if it's I don't care if you want to know how babies are made. I'm not going to tell you because that's weird, but you know, at least ask it. When a mommy and a daddy love each other very much, they fight all the time. No, I was kidding. I'm sorry. Gotta stop projecting. All right. What's the first thing you see on a naked chart? The need to undress it. When I look at a naked chart, the first thing that usually I'll tell you, structure. I just see boxes. I mean, I could speed. Oh, you guys can't see the screen. Yeah, when I look at a chart, the first thing, like totally naked, I just want to do this. That's a weird floor. I get it. I'd have to go to the 4 hour to find that. That's good enough for me. Weekly box. Called it. There it is. So yeah, the first thing that I see is consolidation. Horizontal levels are they're just they're so fucking important, guys. There's so much more important. If I didn't have channels, I would still be able to do this without it. Dude, how many things are we seeing turn bright red at the end of the week besides oil and gold? Qs, man. I really feel like price is gonna fall. Hard not to see that on the chart. But yeah, any chart, you know, it doesn't matter what you give me. The end result is, or the first thing that I do is look for where we're at. It just makes it. Do you see, like, can you guys see that? And maybe this is just something that happens in my brain, and I really do have autism. But as soon as I do this, everything makes sense. Is that true for any of you guys? As soon as I put that box or something I can describe. Okay, you broke up, you punched back, you made a new high, and whatever that was just wasn't enough to hold you up. Or wasn't enough to you didn't have enough juice to keep going. So what are you doing? You're consolidating above that, building above that. Now, what happens if you fail? Well, you got empty space underneath you. So it makes sense when you make the boxes. Of course. I mean, Bitcoin is goddamn. I mean, it's easy. Apple does. Yeah, you are correct. There's so many good examples, you know. This is, yeah, perfect example. Points, and this is a perfect example of points of contact, right? Pretty much right there. 4 hour, same thing. Beautiful. Now, the cool thing is, right, about the cool thing about this setup, guys, is listen, I don't know. I know you guys haven't heard me talk about a lot about it. I took a little 190s put. I think I spent like maybe 250, something like that on that. And that it did end up yanking down like I thought it would. But it didn't go anywhere past the gap that I said that we had to go and break if we wanted to make it to the floor, which was right there. And that's exactly what stopped us today. But this is good. This is good because when listen, I'm not a big Apple guy at all. This is the type of setup that attracts my full size. Pause. But it does. It literally, I mean, even the upside. Like, I can, god dang. That's got to be what caviar tastes like. I've had caviar, it's trash. Anyway, but like you seriously, you have a floor of $200 you wicked off of it today. Cool beans. You've got candle closes and lots of control at cost basis. Cool beans. But also that lines up with the higher time frame cost basis. Right? That being said, if that punches up, right? I have to look at what the next new high is, and the next new high is technically 207 or 208, right? Maybe we go give it the candle close. If we're above that, it's now this bastard, right? See, you break down, you retest, and you fall. Now you've retested that, so if you get above it, one could safely assume you'll take a crack at that 209, and now the upside is in. That's where. Listen. That's when I'm doing it. Now, I have a feeling that over the weekend, something gap down wise could happen. And if you're below these wicks, there is no doubt in my mind you will go and you will hit 190. Like, below here. Imagine having that kind of stop loss. That'd be crazy. And that would be a play. But, I mean, up or down, I don't care. If this bounces next week off of those wicks and comes back up, it's one of those setups that you got empty space right up in here. Look at that. Beautiful. That's a decent play, especially if I could catch it while it's coming out, because it would be cheaper. And as soon as it leaves the top of that box, and it will drive volume into those 220, 219s, all that. Yeah, literally 190 short, 220 long. Unless you're looking for more, which more is actually not a bad play. And one thing I've noticed here, again, if you ever notice, you're like, well, why did that channel break down? First of all, breaking out of a channel is a signal in its own, right? Leaving control is a signal in its own. And you had your 1, 2, 1, 2, and then you didn't have enough to break horizontally, and so you end up losing it. But typically, and 9 times out of 10, your channel is just quite simply going to be a deviation or a fractal, if you will, look, of that channel. This is how long-term ranges are created. It's like a series of, there's actually something called GAN fans. I don't recommend using them, But they're supposed to do the same thing. Maybe not. Maybe it's not GAN fans. You imagine trading like this, though? Oh my God. All right, guys, my exploding rainbows are breaking down here. We're just gonna align our chakras with the rainbows. Yeah, can't you see how clear that is? I mean, it's pretty. Disco. Rising moon. Yeah, shit, you're better off using the goddamn moon cycles. Oh, don't let me show Ivy this shit. I show Ivy this, it's gonna be cut. She's gonna lose it. Moon phases. What is it? New moon cell. Rise. Yeah. People use it on Bitcoin all the time. All the time. But as you can see, it's hit or miss. All right. Yeah, that's also important. All right. Let's see here. Now, finally, get back over there. Okay. All right. So let's continue with this. So we kind of got the right tops of those candles, points of contact. And again, we're just going through the box. Oh, that's not what I meant to do. Can you guys still see my screen? Can you guys see the screen still? Okay. Getting the confidence to do it without you is what is hard. I've spotted plays and missed them. What do you think? So listen. I'll try and answer that. So getting the confidence to do it, how do you gain confidence, folks? If you're a soccer player, what makes you feel confident? Practice? Right, but you could be good at practice. That doesn't make you feel anything. Success. How do you find success? Practice. Scoring. Taking the shot. Failing. And what do all those things take? Courage. The acceptance that you're likely going to fail, but you're going to keep going. I know this sounds corny, but be brave. Just fucking do it. You don't have another go around with this life. You don't get another shot, as far as I know. And at some point, if you're using good risk, I guarantee you every single one of them here has something sitting in their house that they wish they didn't buy that costs way too much money. We are constantly giving our money away regardless. So to set some aside and to be brave with good risk and to take your trades, get fired up, believe in what you've learned, and accept that not only are you going to accept that you are like, I don't know how to, I can't take what's in my head and just plant it into somebody else's, but like, when you see an opportunity and you feel that fear, or you're uncertain, you are opening up the opportunity to learn. And that right there, you just did it. The first step, the leap in the leap of faith, you set yourself up. But to be fired, you set yourself up to take that trade, but you should be fired up at the opportunity, right? It's like almost as if me telling you guys next week I have another class. It's like trading, after I've taught you everything that I've taught you, in between those two. Maybe that's not a great example, but um, it's hard to put into words because it's like I know that what is in front of me is going to suck, but I'm gonna do it anyway, and it's not because it's a bad thing to do, but because it's worth taking those opportunities to learn. And if that's your main focus and not just money, the money will come, but you'll learn from every opportunity. That's the focus. Focus on learning, not the money. And that's a contradictory thing to say when money is that's all we're doing. That's the only reason that we're fucking here. But without a strategy, without something, when I say look at what's above and what's below, it's like what's below you is your strategy. That's what's keeping you. But in order to move up, you have to actually try to take those plays and to accept them as learning opportunities, good or bad. And I think that's exciting, personally. It was for me every step of the way. Even when I was upset, remember, in those bad times, there's a lesson. There's and this is life advice. I mean, I'm using this advice daily. If it didn't go your way, what are you responsible for? Right? What could you have done differently? It absolutely, Elon. It does. So, for those of you guys who are nervous and you're scared to get away from me, I am the reason that you're in the place that you're at right now then. I am keeping you from being successful. I got you here. I helped you. You did the work. But I am now the reason, like, we can't sit by a food source that's right next to us and expect that we're going to go out and work hard for our own. It's not your fault. It's human biology. I mean, it's literally we're meant to seek safety and comfort and all that good shit. And that makes us feel safe. But when do we grow when we're comfy? Do we grow when we're safe? No. So if you put yourself out there and take a chance on what you've learned, you are opening up the doors. That is how you get better. Period, guys. And yeah, you could look at it. I'm kicking you out of the nest, and you're not going to learn to fly unless I do. If I say you can stay in the nest, you're not going to. Or if I say you can stay in the nest and everything is all safe and sound, why use your wings? This is the hardest part of having made this Discord and all this independent traders and stuff. It's like, yeah, telling people that are paying for your service that they need to ignore you at some point, it's kind of confusing, but it's the only way, right? I would say that a lot of you guys have, jobs where you work with your hands, and somebody probably showed you how to do something, and then you went and you probably fucked it up a couple times. I know that happened to me, dude. I remember the first time I got taught how to use grout. Listen, folks. There was grout on the hardwood floors. There was grout under the baseboards. There was fucking grout everywhere. Everywhere. I got fired. I did such a bad job. And it sucked. I thought my life was over for 24 hours until I remembered that I could still break shit. So I went back and kept doing my demo jobs, but like, first time sucked. I learned from it. Second time, I was like, nah, man, this time I'm going to really, really pay attention because I didn't like how that felt. So you take a bad trade and you got in too early. Well, I hope you didn't like how that felt because ultimately it's you who's going to decide whether you do that again. And that's what I'm trying to do is hand you guys over the rails. You are in charge. You're a big boy, big girl. I'm trying to give you those reins and be like, yo, you can. I'm not. I don't care what you think of me. There's some of you guys in here that you're fucking smart, mad smart. I would say assume the most of you are. There's no reason that, you know, and and I said this the other day. If you want me to confirm your trades, ask, and at some point, yeah, I get that. Ask me, what do you think of this chart? What do you think of these contracts? Like, you're learning. But who confirms my trades? Who tells me what's good or bad? Me. I don't ask anybody. I don't even care what anybody else thinks. How many times has Juan disagreed with me in the last month? A lot. Not a lot, but like enough to notice a couple times, right? That's good. That's good. We both can learn from that opportunity. You were. It didn't hold though on that first one, remember? It popped up and immediately reversed. Yeah. I was wrong, he was wrong. But at the end of the day, right? I would rather someone be there where they want to have the right answers and to feel this out for themselves and figure out. I mean, it's just like in life, guys. I could explain it to you all for a whole year fucking straight. But it wouldn't be until you actually start driving, start using those tools, that you would actually become proficient with them. So, all right. So we're gonna break off really quick and talk about sellers below, right? So sellers will sell when price comes within their control. When retesting, buyers are stepping up before price can control in the structure below, right? So buyers are stepping up, allowing price, right, to not close underneath that area of control. Hold on one second. Why is that over there? I got some random shit over here. I don't know why that's there. And random arrows. I must have fucked this up. So this is an example of a sand trap, right? And I use that a lot as a way to describe something that we don't want price to fall into, because if it does fall into, there's a high probability, especially looking at what's within that range. This happens to be empty space. That just happens to be the top. You do bounce before you get there. You fail to pull yourself back up above that top. Let me pull up my, there it is. So empty space in here, bounce off of here. The bounce is unable to recover above that previous resistance, and price continues to fall. You do end up with that empty space, but the candle closes underneath that wall. And this is what I am literally doing right now, right? When I showed you guys IWM, the foot has fallen into the sand trap. And just like a sand trap, right, we typically fall, or we get pulled, sucked back in, quicksand, whatever, right? Sand trap is, I know, what is wrong with me? US. Yeah, sand trap. I don't know. I don't know about you guys, but I've had terrible experiences golfing, and I keep getting stuck in them. So it's just an experience-based thing. You're not supposed to drive the cart through them. I don't really understand why. Anyway, but this is an example, right? And it's not something that we need to. It's pretty straightforward, right? It's passing that baton. But in this case, it's a range that, because of the empty space, yeah, right. Because of the empty space, price can fluidly get pulled or sucked back under. So sell walls tend to hold when our cost basis is the only place where buyers can step up to push price past the wall if you were to fall into that area of consolidation. So if you have, and this is not really consolidation, but if you were to pull back, cost basis is typically the only place when you fall. And that's what I'm saying when I'm talking about IWM. IWM closed in the sand trap, but I don't have a for sure signal because we are not under cost basis. And we have not yet even hit it. So until we do, we are still only speculating. All right. Now, the golden trigger, which, in this case, this is cost basis, right? And this is always found in between 50%. And I remember the day that I discovered that, and I just almost cast it off because I couldn't, that was just something that I thought was absurd. There's no way. But going through volume profile, that is what I found, that the majority of the volume, right? And I consider this to be the middle of where that tug of war, right, is happening. So the exchange of volume inside of this is literally the battleground, right? You could think of it like that. It's literally where buyers and sellers battle back and forth. And if you zoom in greater detail, most of the time, even cost basis will show respect, right? But there is also, this is why I tell people I don't try to influence them to do this, but when you're inside of a box, you'll notice that you reject, but the candle close gives us the move up. Now there we establish another range, and then we fall back down. Cost basis is broken once again, and we go and we find a floor. Now our range is created. So that cost basis mark, bam, is still true. Candle closes above, you go to the top. Candle closes below or opens below, you go to the bottom. 1, 2, 1, 2, 3. Price, of course, retraces back and falls underneath the top of our box. And what do we need to do in order to move through a top of a 24-hour box or a higher time frame box? You got to keep your foot on the gas pedal. It does. Now it runs out of gas when it hits cost basis, and this is not the time to do that. Price holds, and if it holds on cost basis, typically it's going to reverse and at least go and tap the top of that box that you fell into for a retest. But this is where that volume comes in. And this is where cost basis is where buyers and sellers decide if they like the price, right? So offer, nah, but we keep coming back down to the floor. And so eventually sellers can't resist that price and buyers end up accepting it. So if you bounce off support and clear cost basis, you will go to resistance and vice versa in range, right? Now, new lows or new highs, cost basis is broken after reclaiming a box, right? Meaning candle close on the floor. We're reclaiming that box. That's that rock climbing mentality that we're having when we're looking at price. Price moves up, shows you that it's held on. Now we've got the floor. And all of a sudden, cost basis becomes king again. This is the only time that you are guaranteed anything, actually, in my opinion. And nothing is guaranteed, but this is, in my mind, a guarantee. For myself, because of legal reasons. But it is, as far as the chart is concerned, punching through the 50% mark of a box has been one of the only things that is guaranteed price will continue to move by displacing the volume that is centralized in that box. All of that volume is displaced, and depending on what is above it, and that is the icing on the cake. Well, contract selection is icing on the cake, but depending on what's above it, if it's empty space, those are the plays I go after. especially if it's a punchback. All right. You also find strong levels of reversals clearly off of this mark, especially if price moves fast. Big fast, you're typically not going to be able to hold. The only variable, if you can close below it. Okay? Now, I'm going to break this down for you guys. Cost basis is a study of volume profile with structure or a box. Higher volume is found at the 50% mark. When moving through cost basis after reclaiming or falling back into volume at the falling into volume at that mark is used to bounce or push the stock further. Within the box, it is where buyers or sellers either push or hold, therefore receiving the highest influx of volume. Typically, orders will sit at this mark. Now, this is an important mark, or this is an important moment in this chat right now, or in this workshop. And we're going to go over it again. But this is a general rule of thumb when it comes to cost basis, right? If you open above cost basis to resistance and beyond, typically. Open below cost basis to support. Open at resistance or under a box, right? Fall to cost basis. Open at or on support to cost basis. So if price opens up and you are under a box and you open up on the floor, you will go to cost basis. If you open up under a box, under the floor or under resistance, you will fall to support. Right? Now, again, if you're at resistance, opening at resistance at the bell within a box mid punchback, at resistance within the box, you will pull back and look for a bounce off of cost basis for that continuation to the upside. If you open at cost basis overnight, coming up or down, and if you open up on top of it going up or underneath it going down, you're going to support, right? Or in this, so open below cost basis to support and open above cost basis to resistance. And that is for opening prices. That's on any time frame. Well, 24-hour is that's the opening candle, right? So that's what I'm focused on, typically. Right. And we'll come back to this. This is something we're going to come back to. So again, just to repeat this slide. And, again, we have boxes that draw the 50% mark, but I'm explaining this because I want you to know how I found it and why it's so important. So it's not just like this fucking mystery magic line. The majority of the volume inside of areas of consolidation, and I'm going to give you one variable, but inside of consolidation is at the 50% mark. If on the 24-hour, this is the only variable, and this is an example of kind of like Tesla going for, instead of 8 days or 9 days, goes for a whole 30. When you say open, is it 4 a.m. open? 4 a.m. That is the open. If a box goes past the 3 taps on both sides, it doesn't break on the 4th, you are likely inside of what is likely to become a weekly box. Weekly boxes are tough to wait for, but give the biggest breaks and bigger moves. But now, instead of the volume being at just the 50% mark, if you go past those 3 waves on higher time frames only, you can move volume towards the 25% marks in between cost basis above and below. Now, I'm going to tell you why this is not really a concern of mine. Because if you don't have the fucking volume to get out past the 3rd wave, and I mean that on the weekly because past especially on the weekly, if you go past 3 waves on the weekly, you've got some crazy consolidation coming. I think Starbucks is one that had one like that. There's a couple that, they ended up having these really large areas of consolidation. And so volume starts to get moved around. But that's outside of what I do. I don't care about big, like, the only thing that I would really care about is whether one of the other ranges break. 25% marks don't matter. So just information, especially the equity or something like that might be important, but otherwise. No, waves are the points of contact. 3 touches on top, 3 touches on bottom. The waves are what describe, yes, basically moving inside of it. Yeah. All right. So let's talk, and we're getting close. Let me see where we're at on the recording here. I've already recorded 1 hour and 30 minutes, and we just hit 1 hour and 30 minutes. 7:50. Oh shit, it's 8 o'clock. Okay. You guys cool with saving this one, or do you want to go and finish the last two? Well, hold on. Do we have any? How many slides do we have? Quite a bit of slides, actually. I personally would rather save this because it's all one. It's the perspective of sellers from cost basis and why that happens. And then I have one for buyers. And then I'm going over 333 waves, which we're going to go over a lot, everybody. And then we're going to go over parallel channels. And then we're going to go over parallel channels. And then we're going to be talking about trend, which is channels. And then more channels. And then confluences. And then gap ups and gap downs. Punchbacks. Don't look at that. Don't look at the slides. Stop it. Stop. Don't look. Stop. No. Ah. Panicked. All right. Anyway, this is the end of this class. If you're watching this back later, I hope you enjoyed and learned. Please make sure to funnel any questions into the Discord.